Good morning, everybody, and welcome to Broker Briefing, Australia's premier platform for brokers and investors, providing networking and digital events for leading ASX-listed companies. I'm Jane Morgan, and today you'll be hearing from Reg Spencer, Head of Research for Canaccord, followed by four lithium companies: Mont Resources, Intra Energy Corporation, Greenwing Resources, and Galan Lithium. So up first, we are joined by Reg Spencer, the Head of Research for Canaccord. He'll be providing an overview of the lithium sector. Good morning, Reg.
Thanks, Jane. Good morning, everybody. This morning I'll be providing a outlook for the lithium market based on the research that we have done here at Canaccord. I'll just pass through the disclosures, which you can see there. As an introduction to the current state of play in the lithium market, there's no doubt the pricing has been volatile, as you can see on this chart here, which shows various lithium product prices dating back to 2018. Clearly, this recent price performance is characterised by the sharp spike in prices that we witnessed at the back end of 2021, followed by, I guess, a sharp fall or pullback in prices through the early part of 2023. As the market dealt through stock inventories in the system and some evidence of slower demand growth. Oops, sorry, that's jumping around a little bit. But in spite of that volatility, we remain bullish on the outlook for lithium. If we can start with demand and the key driver of that being EV sales, as we can see on this chart here, EV sales continue to grow and demonstrate strong growth performance. So far in 2023, there's been just over 7 million EVs sold around the world. That's plus 42% versus the same time last year. And within that, China does remain the primary driver of that sales growth with around 56% global market share. Now, so far year to date, the market does appear to be on track to meet ours and the market's expectations in terms of total EV sales through the year. It's worth highlighting that sales growth or EV sales throughout the year have shown quite a distinct seasonal pattern, i.e. the second half is always stronger than the first half. So with first half sales arguably around that 6 million unit mark, we should see full year sales achieve that 13 to 14 million number and continue to drive reasonable lithium demand growth. Now, if we think about longer term outlook, we are very optimistic on the long term prospects for ongoing EV penetration. By 2030, we think global car sales, or half of global car sales, will be covered by electric vehicles. We would also highlight that that outlook is supported not only by industry targets or auto OEM electrification targets, but also by government legislations, with numerous countries around the world looking at having either legislated or looking at legislating minimum electrification targets or the banning of ICE sales outright. I'd also highlight one other part of the demand market or the demand side that not a lot of people seem to be talking about is stationary storage applications. This is either behind the meter, this is industrial or good scale battery storage. It's a key component of the ongoing rollout of both solar and wind energy as part of the renewable market. We are now starting to witness some pretty strong growth in that market segment. So all up by 2030, we think demand is going to continue to grow at over 20% per annum and hit about 3 million tonnes of LCE by 2030. And noting also the potential for some upside to our forecasts through larger EV batteries, faster EV sales growth, or stationary storage batteries. Now, what if I told you that looking at demand from that perspective could be undercutting the market? In our view, battery manufacturers do have better visibility into future demand. And as such, we think that battery factory capacity could be a more reliable indicator of future demand. Total battery factory capacity is now estimated to be around 7 terawatt hours by 2030. Now, at 100% utilisation, this could imply that overall lithium demand could exceed 7 million tonnes of LCE by 2030. Now, that's a little bit optimistic, noting that battery factories often have ramp-ups, they often have a high scrap rate. And if we just assume that utilisation rates for those factories were only 55%, That would imply a lithium demand of around 4.5 million tonnes in 2030, which represents over 50% higher or an increase on our base case. So on that note, we think that there is a lot of upside to demand forecasts in the market, and perhaps EV-based methodologies such as what you see from industry and brokers and banks such as ourselves could be a little bit conservative. Now, all this said, demand growth forecasts are predicated on adequate supply. You can't sell an EV if you don't have the lithium to make your batteries. So the supply side of the equation is just as important as demand in our view. If we have a look at what's happening in 2023, we continue to expect this year to be a significant supply growth year. In fact, we estimate that this year will be about a 50% increase in supply relative to 2022, and that's a result of a number of delayed greenfield and expansion projects that were hit by COVID through that 2020, 2021 and 2022 periods. If we break down this forecast supply growth, greenfield projects are expected to play a major part of this. We see them as critical to the long-term supply outlook. And if you have a look at the chart on the bottom of this slide here, you can see that approximately 50% of our model 2030 capacity comes from greenfield projects. Now, the implication for this is greenfield projects typically carry higher permitting, financial and technical risks. It's on that basis that we have to take with a grain of salt the ability for the supply side to keep pace with demand. That does draw into question what happens for long-term pricing outlooks. Another way of looking at long-term supply, this chart is a little bit busy, but it basically represents all the lithium projects that have come online in the last couple of years and the projects that we expect to come online in the next few years. But basically what we're showing here is that on average, lithium projects are late by approximately 3 years. The black represents when they were originally meant to come online, the dark blue represents the delay, and the dark grey represents steady state production. In some cases, that delay has been up to 10 years. So while we see a supply pipeline that's starting to build out, we're seeing new discoveries being made, we're seeing new projects be brought into production, it's worth being a little bit more cynical about that supply growth, noting the propensity and the poor track record of the industry to bring in new supply as planned. Another factor that we think could limit the market supply response is that inflationary pressures continue to drive up capital costs. We think that average industry capital intensities have increased by approximately 20% over the last 12 months and are now sitting at somewhere around that $25,000 a tonne mark. So if we take that average capital intensity and multiply that out by the amount of supply that the market will need by 2030, we see an industry that requires almost $60 billion in capital to be spent in order for supply to keep pace with demand. Now, it's not easy for an industry to spend that kind of money quickly, and the noting that the lead times for new supply can be anywhere, as was shown on that previous slide, from say 3 to 5 years. We need to have spent this kind of money by 2027 in order for supply to keep pace with a 2030 demand number. So in our view, it's almost too late for supply to keep pace with demand. And we think that's going to have major implications for how investors and how the industry thinks about long-term pricing scenarios. So when we throw supply over the top of our demand forecast, we come up with this curve. As you can see here, we expect that major market deficit that we witnessed last year to somewhat reverse in 2023. We expect the market to remain closely, well, more or less in balance over the next couple of years before we start to see market deficits emerge again by 2025 and really start to open up by the back end of the decade. The following slide here breaks down that supply demand or that market balance in a little bit more detail. You'll see here that the market we see to still remain in undersupply, but not the same kind of deficits that we've seen in the last few years. Again, before we start to see that deficit open up in the back half of the decade. The potential for us to be wrong on these forecasts is twofold. Number one, if we continue to overestimate supply, like what we think the market has done for the last 5 years, could lead to much higher deficits than what we've forecast. And similarly, if demand continues to grow a lot stronger than what we've forecast here, these deficits will be a lot higher than what we've forecast. And again, I'll point you to that slide that we mentioned earlier, referencing the impact that battery factory capacity could have on demand if we thought that was the primary way to forecast that part of the market. Again, if we have a look at batteries on the demand side, you've got clearly EVs are going to be the strongest part of the market, or the largest part of the market, I should say. But other batteries, including consumer products and ESS, or stationary storage, that could be a part of the market that grows a lot stronger than what we forecast here. Again, potentially pointing to much larger deficits than what we've shown in that red hatch box there. So the outlook for pricing. Clearly, with the market moving back into balance or much smaller deficits, at least, we don't expect the pricing that we saw in the back half of 2022 to be able to be sustained. And frankly, in our view, that kind of pricing environment was not sustainable for the industry, given the impact that it has on the cost of batteries and the impact that it would have on the sticker price of an electric vehicle. So we expect pricing to continue to settle and settle around current levels. Our long-term forecast, as you can see here, have chemical pricing settling around that $30,000 to $40,000 a tonne mark, and long-term spodumene settling around that $2,500 a tonne mark. To put that number into context, we need to measure that up against where pricing was prior to that, which you can see here. You're looking at 2 or 3 times spodumene, or 2 or 3 times lithium hydroxide or carbonate, where we expect pricing to settle. But the other way to think about that is to have a look at the implied price that the equities are suggesting, which is about half of where we think prices will be in the long term. So on that basis, we see good potential for equities in this pricing environment. But not only that, I draw your attention back to these market deficits that we forecast in the latter part of this decade, which could also suggest that our long-term pricing assumptions are probably a little bit too conservative. A key theme in the market we see is a continuation of M&A activity. This table here shows a selection of recent M&A or sector consolidation transactions. What you'll notice is that there is a distinct trend for the valuation or implied valuation of these M&A transactions to start to increase. We're also starting to see rejections of M&A bids, which would suggest that either industry or investors are starting to recognise the long-term strategic value of lithium assets, and that the strategic players or downstream players that are looking at moving upstream are probably going to have to increase their perception of value in order to secure these assets over the long run. Lastly, I'll finish off with what we see as the key themes in the lithium sector. If we're having a think about the kind of investment or the kind of companies and the kind of stocks that an investor might look at, you look at producers versus developers and explorers. Lithium producer stocks we see as maybe witness to increased volatility given correlation to lithium prices, but we see valuations remaining attractive over the long run compared to spot pricing. The developers, those companies that are developing lithium projects today, we consider those to be perhaps more exposed to financing and commissioning and ramp-up risks. And conversely, explorers, in our view, are starting to offer increased appeal in the current environment, given that they're not necessarily that exposed to volatile lithium prices, and you do have the potential for significant value uplift on a new discovery or resource definition. And there's numerous examples of that in the Australian market of explorers that have done well in recent times. Another theme that we see as dominating the sector is emerging lithium hotspots around the world. It's not just Australia. We are starting to see the rise of Canada as an emerging jurisdiction. You're on the doorstep of the world's second largest auto market there. Compared to Australia, it is significantly underexplored, and through that we see excellent potential for continued discovery, and you've got strong ESG credentials there, given the high proportion of renewable energy and proximity to end markets that Canada has. Another emerging jurisdiction we see is Brazil, and we do see some pretty exciting potential there. Geologically very prospective, relatively underexplored today versus in Australia. It's an established mining jurisdiction, and unlike Australia, is a lower operating cost environment. You can get things done relatively quickly in Brazil, and there are a number of emerging stories that we see in that country that could have the potential to do well over the near term. Lastly, would also mention Africa. While that has higher country risk, proximity to key end markets such as Europe and the Atlantic Basin, plus its geological potential, should continue to see new development and production opportunities arise over time there as well. We've spoken about M&A, and then lastly, geopolitics. We see that continuing to have an influence on what happens in the lithium sector. Key producing nations such as Chile, we've seen what's happened there. We've got a government that's moving to the left, which could potentially disrupt that country's ability to continue to grow its production base. Argentina, there's an election there later this year. Potentially, we're seeing politics move to the right, and that could see Argentina's role in the lithium supply equation increase over the next little while, especially given the large number of development projects in the country, as well as China, given the politics involved with and China's concentration and control over critical mineral markets, and the West's desire to increase their independence from their control. Where does China go for asset opportunities? It really does limit them to, say, regions like South America and Africa, in the case of mergers and acquisitions. So Jane, that's probably it from me. I know that's a lot of ground to cover in a relatively short period of time, but hopefully that's been useful for everyone. And if anyone's got any questions, happy to take them.
Wonderful. Thank you, Reg, for the great presentation. I might get you to stop sharing your screen there. We've run slightly over time, but I think one of the key things is, tell us about some of the new producers that will be coming online in the near term. So who are Canaccord looking at?
Well, there's a few of them now. Look, if we get beyond the Pilbars and the Allchems and the IGOs in the markets, we're starting to see a new crop come through. Companies like Liontown that are moving through their development and construction. Companies like Lithium who are partway through construction at their project in Africa. But you've also got companies that have recently moved into production, such as Core Lithium in the Northern Territory, and Canadian focused Sayona Mining, which has recently just commissioned or recommissioned a project in Quebec. They're the kinds of things that we're focusing on. But if you have a look on a 2 to 3 year period, you're probably going to that peer group is probably going to increase dramatically, and there's a whole raft of companies that we see have considerable development potential and hopefully go some way to filling that supply gap.
Amazing. Well, Reg, thanks again for the great presentation, and a copy of today's recording will be available online in the coming days. But thanks again.
Thanks, Jane.
So next up, we have a presentation from Mont Resources with the ticker code MRZ, a company focused on lithium exploration in the underexplored East Main Greenstone Belt of Canada. Executive Director Pete Roos was unable to join us live. However, I'll bring up a recording of his presentation from yesterday. I apologize, everyone. I just realized that we won't be able to hear my presentation. I'm going to start that again. I apologize, everybody. Let me see if I can try that again. It seems we're still having issues.
Good morning. My name is Peter Roos. I am the Executive Director at Mont Resources, ASX ticker MRZ. Thank you very much for having me on today. I'm here to talk about the company. We are a Quebec-focused exploration company with two large project areas in the James Bay region. And we have recently embarked on a lithium exploration program, multiple lithium exploration programs, and I look forward to running you through these as we go through the presentation. Here's the usual disclaimer. I encourage people to jump on our website to access the presentation in their own time. Look, a few highlights here. We have a 650 square kilometre land package here where we were an early mover, and we have basically been in the country now for about three and a half years, and we have been exploring for base metals. And recently, the board had resolved to open up our view and our exploration ambitions to include lithium. There's obviously been an absolute flood of companies going into the region exploring for lithium. Our ground is very prospective for lithium. It sits on greenstone belts with the right mafic volcanic rocks and granite formations that are conducive to the lithium pegmatite, spodumene-bearing pegmatites. We have been busy in the field. We have got two prospecting programs underway at our Northern Lights properties, and we will have a third prospecting program underway at our Wapiti project, which has been subject to minor delays due to the wildfire situation, which we hope to be resolved in short order. Quebec is a really attractive exploration setting for companies. It is ranked 8th on the Fraser Institute Mining Attractiveness Index. Great infrastructure, hydropower, and at a really good fiscal regime with rebates for exploration companies. A quick dive into our corporate snapshot: 82 million shares on issue. We recently carried out a heavily oversubscribed share placement about a week ago, which has topped up our cash position to just under $4.5 million. As of today's closing share price, our market cap is approximately $18 million, giving us a very attractive enterprise value with a lot of room for growth. The substantial shareholders are Michael O'Keefe, who is well known in the Australian and North American, particularly the Canadian capital markets, is our largest shareholder, and his support is obviously ongoing and very appreciated. And the other large substantial shareholder is a family office out of Western Australia. The rest of the top 20 on our share register are all sort of noteworthy family office investors with a particular focus on mining or mining investments. They have been a lot of them have been with us from the very beginning, since 2019, and continue to be really supportive. Board of directors: Gary Lawler is the chairman. He has an extensive career spanning over 40 years in the corporate law and mergers and acquisitions. He sits on a number of boards, most noteworthy Champion Iron, and he was on the board of Riversdale Mining, Riversdale Resources, and Riversdale Mining, and is a huge support to me as executive director. Our other non-executive director is Ronnie Beaver, who is well known in the Australian capital markets. He chairs Bannerman Resources and has a a long career spanning in investment banking. My background has been funds management and capital markets in both Sydney and Perth, and now London. And I sit on the board of Greenwing Resources and Galan Lithium, which is a UK listed company. So we are a tight group. We have in-country consultants working on both properties that we own, and we look to build on that in-country team looking forward as we get more active in the field. So diving into the projects, Northern Lights has been our focus over the last quarter and a half of operating. As I mentioned, two lithium fieldwork programs have commenced, and will also recommence in September as well. And these are targeting the pegmatite outcrop across the property that we have seen. We've carried out a LiDAR survey, which is a low altitude photographic survey that has been really interesting, and I'll cover that on a slide that's coming up. And the Wapatik project will commence its maiden lithium exploration program there. This project still is suffering some delays from road closures due to the wildfires, but we hope that situation will rectify itself soon, and we'll be in the field there in short order. I've mentioned Quebec as a really good jurisdiction to operate, and I'll let the audience read that in their own time. But we're very happy to be in this province, and I think it's a testament that there are so many other Australian listed juniors now joining us. It's a really exciting place to be exploring. A shot here of our project locations and the vast collection of discoveries that have happened around us. You'll see with the grey labels are all of the lithium, both defined resources and also exploration targets and/or exploration success that have been experienced with lithium juniors, and the dark bubbles are the known gold deposits around. Most notably, which I think the audience will know about, Patriot Battery Metals has been a very noteworthy discovery, and that project is a fantastic discovery that has really opened the door to lithium exploration in Quebec. And the other thing worth noting is, which we are very encouraged about, is our Wapatik project sits about 12 or so kilometres north of the James Bay project, which is owned by Alchem, which has just had a very meaningful resource upgrade in August. And I will also note that our neighbour Benz Mining has had some recent success with their lithium exploration project called Ruby Hill West, which we were very encouraged by the potential of the same mineralisation and the same volcanic mafic rock leading into our Bohea property, which you'll see there in the centre of the collection. So looking at the map of Northern Lights here, the dark blue project outline are owned 75% Mont Royal. The East Main Loran project is under option, which has got one more option milestone payment to be made at December of this year, and we'll own that 75% Mont Royal. And that's really Bohea and East Main Loran are the focus of our lithium exploration going on at the moment. So here is just really a chart here to show what we're up to. So as I said, multi-phase exploration program, sampling, mapping, chasing up these outcropping targets that came from the LiDAR survey. We hope to delineate and rank those targets with assay results, and obviously get back into those particular targets that are most promising, and do some trenching work, which is a very efficient way to delineate the size and scale of these outcrops as they go undercover. And then soon after that, we hope to be initiating our drill program sometime in October. And obviously assay results will follow that. Look, diving into the Bohier property, this is obviously a long strike from the recent success that Ben's has had. We are really encouraged by the mafic volcanics that are a similar package that run right through the property. I'll go on to the next slide here, which was really the results that were in our quarterly report, which shows the yellow targets that we identified from the LiDAR as visible pegmatite. And our team has been busy over the last month diving into each and every one of those to rank them and to take samples and get them to the lab in short order. The other focus of the exploration you'll see here with the yellow outline is following up a historical government database lithium occurrence. And we have been busy in that northeastern corner of the East Main Loran property. Again, this is actually exploring off the fringe of a granite rock formation called the Wahamen granite. And that has been a very sort of prospective exploration target to be exploring off the fringe of. Again, the pegmatite occurrences seem to be all over the property, in particular this northeastern corner, and we hope to again get samples and follow up with trenching programs in short order. The East Main Loran project also has a copper, nickel and gold focus, but I won't focus on that now, but there is plenty of material on the potential on that property on our website and in our quarterly. I'll dive into the Wapatik project, which you'll see here to the left of the map. As I said, right near the Alchem deposit. It's obviously in a, again, in a very prospective area for lithium exploration. And I'll dive into this map, which will be really the 5 key areas of the property taken from satellite imagery that we are hoping to get into and explore in the near term. We are based this project we are earning into to earn a 70% interest, and we are getting very close to reaching the first milestone, which is 50% ownership. Which will be achieved by the end of 2024. The property also had a very noteworthy nickel discovery on it, and that nickel potential and the exploration program there is being evaluated. However, the board has decided to pursue the lithium strategy and follow up these till sampling occurrences that are occurring on top of what we can see there as outcropping pegmatites. So again, get in the field, sample, trench, and get the samples to the lab, and then delineate and get into the field and drill, hopefully around the similar sort of time frame as we'll be doing at our other projects at Northern Lights. So around the October, November. So it's a really busy program of work, and we really are very encouraged by our land package. You know, we have 650 square kilometres of ground, so it's an enormous amount of ground to cover. So really, it's a case of getting the teams in the field as soon as practically possible, and getting results back and initiating drill programs as soon as we can. I think I might leave it there.
So once again, I apologise for the technical issues that we had there, but if you do have any questions for Pete, please, we encourage you to reach out via the contact details on the bottom of their ASX releases. And we are running slightly over time today just with the technical issues, but let's jump into the next presentation. So next up, we have a presentation from Intra Energy Corporation with the ticker code IEC, a company exploring for lithium in the James Bay region of Quebec. To tell us more, we are joined by Managing Director, Ben Dunn. Good afternoon, Ben.
Good afternoon, Jane. How are you today?
Well, thank you. Let me bring up your presentation.
Thank you. Very excited to be here and presenting. So, good morning to our existing shareholders and welcome to anyone hearing the story for the first time. Okay, if we can click to the next page to the usual disclaimer, please, Jane. Okay. All right, investment highlights. For those of you that don't know me and don't know the company, I'm Ben Dunn. I'm the Managing Director of Intra Energy Corporation, also familiarly known as IEC, which is also our ticker code on the ASX. We have two projects. We have a project we're calling Llama, the Llama Lithium project, which is in the James Bay region of Quebec, Canada, and also a project in Western Australia, which we've designated as Yalgara. Today, we'll be focusing for this briefing on the Llama Lithium project in Quebec. We acquired the project in May. It was ratified by shareholders in an EGM in July. We own 100% of it, and it was vended to us by the Derouge Group, who have been active in the area and active in vending projects. We regard it as strategically located in the James Bay region of Quebec, which is an area I noticed that Reg designated it's fast emerging as a world-class lithium province. Number of people exploring there, and we're hearing from them today. Canada and Quebec specifically are an excellent jurisdiction. They're a tier 1 mining jurisdiction. There's excellent infrastructure in the region, which we're able to access, and we're very excited to be there. The project itself, we'll talk further about. It comprises over 120 individual claims consolidated to about 63 square kilometres in area. And we're very excited to be starting exploration there imminently. And there is very much the aggressive exploration program we have will unlock the significant exploration upside. Next slide, please. As you can see, just a bit more about IEC. Lovely photo of myself. Graham Robertson, the chairman, who has extensive experience in both mineral exploration, development and management. And we have our two geologists, Ed and Steve, who are overseeing the Western Australian project, and the Derouge Group, who vended the project into us and then have also entered into an arm's length consulting agreement to provide geological services to us in Quebec, Canada. We recently, in July, completed a capital raising approximately 3.6 million Australian dollars. The company is now well funded. We've got about $3.5 million in cash on hand, and it gives us at today's value, it gives us an enterprise value of 2.9 million. As you can see there, the board is well invested in the company, not just with our time and expertise, but we've put our hard-earned cash into the company. We're strong believers of the story, and will continue to buy as opportunities arise. Next slide, please, Jane. As you can see, we're all aware of the opportunities in the lithium market. We think that Canada is an underexplored opportunity. There's a number of names that we're all familiar with, some great explorers, which we're hearing from today. We're hoping to join that band. And then there's a number of companies that are now having fantastic success, obviously Patriot heading it. We also note with some excitement the success that Loyal Lithium are having at their Trieste project, which is just to our south. And we're very excited about getting on the ground in the very near future. And the success that is being had around us is exciting us. If you could please go to the next slide, Jane. As we can see, our project Llama, it's designated there in green. This is important just to note, not the greenness, but important to note the proximity of our neighbours. You can see Adina just to our south there. And again, I flagged Loyal Lithium and their announcement yesterday of the success that they're having at their Trieste project. Our project, it's situated in the heart of the James Bay region. It's close to close to infrastructure, close to the all-weather Trans-Tygar Highway, and its proximity to a number of projects. Winsome's Adina. We have Patriot over to our west. Allchem, who've recently announced some further drilling success, and obviously I keep pointing out Loyal Lithium, who have had recent announcement just to our south there. Next slide, please, Jane. And this further identifies where projects are sitting near us. Neurology for a junior explorer like us is important, but it's also important for investors and potential investors to take on board. Next slide, please, Jane. So recently, having acquired the project from the Darouge Group, we engaged them to undertake further studies. Part of that was an analysis of high-resolution satellite imagery. When we acquired the project, they'd identified 20 pegmatites on the project, 12 of which they thought had potential for lithium-bearing properties. However, after this further study, they've identified a further 108 pegmatites, giving us a total of 120 pegmatite targets for further analysis. We're intending to start exploration in the next 4 weeks. We're going to be active and pushing this project forward at a rapid rate of knots. And we are very excited about this further analysis and targeting with 120 pegmatite targets to give us something to really sink our teeth into. Next slide, please, Jane. And I think this is the important slide. This shows the visible outcropping we have on our property. It's been identified by the high-resolution satellite imagery. These are 4 examples of the numerous outcrops. As I said, we have 120 outcrops that were identified through the high-resolution satellite imagery. There's prominent white patches, which are characteristic of the pegmatites. Now, we all know that pegmatites don't necessarily equal lithium, but from where we're starting, the starting point of all exploration, you want something to aim at, and we have 120 of these to sink our teeth into. There's 4 large-scale outcrops, which we're particularly excited about, ranging from 400 metres in length up to 500 metres in length, and from 150 or 100 metres to 200 metres in width. So they're prominent, they're big, and they're exciting from an exploration point of view. Next slide, please, Jane. So we acquired the project in May. It was ratified by shareholders in July. We undertook further desktop studies and the use of satellite imagery over the last month. We'll be running a LiDAR campaign in the coming weeks, and then our exploration, on-ground exploration, will start in mid-September. We're going to move quickly to identifying drill targets with the aim of being on ground and drilling by the end of the year. So we're a fairly simple story, an exciting story, and we're very, very excited about the progress we're making. You'll see below that we have the Yalgara project in Western Australia. We're also working that actively at the moment. We're running some further ground geophysics on that with the aim of identifying drill targets there. That's really specifically looking for copper, nickel and PGEs, although in the northeast of the northern block, we think that we have some potential lithium targets. There'll be some field work and some mapping done on that in the coming month, and we'll be announcing that to the results of that to the market as they become available. But again, both projects will be driving them hard over the next 4 to 5 months. Identification of drill targets and then drilling with the aim of drilling by the end of the year. Thank you very much. It's a simple story, and happy to take questions.
Ben, wonderful. Thanks for the great presentation. A couple have come through, so let me jump into it.
Sure.
So if drilling at Llama goes ahead in December, when are results expected?
Well, I would think that early in the new year, we'd be aiming for results to be out early in the new year. Jane, are any of these questions coming from my mother, because she promised that she'd be right to make sure that I wasn't sitting here without anyone to ask anything?
I don't think so. This is coming from James, so perhaps not.
Thank you, James.
Next one. So what excites you most about the Llama Lithium project?
I think that from the recent work that we've done with the satellite imagery, and then we'll be running LiDAR as well, but I think to take it from 12 pegmatites to 120 and thinking that it's a 63 square kilometre block or area, so it's quite densely packed with pegmatites. So we've got some excellent targets to really get into. Like all of the companies in the James Bay region, we've been affected by the fires, and obviously our thoughts go out to the people directly affected by that. We're happy to hear that situation is now abating and that we can get on ground. We'll be on the ground there within the next 4 weeks. We're very confident about that, and that from that we'll be looking into those 120 pegmatites. And I'm most excited to be on the ground and having a look at this densely packed pegmatite area. You could almost say it's a swarm of pegmatites we're going in to look at.
Wonderful. Well, Ben, that's all we've got time for today, but thank you for the great presentation. And if you do have any further questions for Ben, please feel free to reach out via the contact details on the bottom of the ASX releases.
Thank you very much, Jane. Have a great day.
You too. So next up, we are joined by Executive Director Peter Wright from Greenwing Resources with the ticker code GW1, a green metals company focused on lithium and graphite. Good afternoon, Peter.
Hi, Jane. How are you?
Great, thank you. Let me I'm going to just turn your camera on.
Yeah, right. I'm trying. It says I can't open the hosters. Stop it. Maybe if the host can do that for me.
I've just turned that, updated that now. Do you want to maybe?
Oh, beautiful. Thank you. Here we go.
Brilliant. Let me bring up your presentation.
Thank you.
When you're ready.
Thanks, Jane. Look, Peter Wright's my name, as Jane said. I'm with Greenwing Resources. We've been working away for the last 7 or 8 years extremely diligently and hardly to sort of get to the juncture in our development where we're at today. It's a unique confluence of events. Given the time constraints, I will just speak at a high level. Anyone's welcome to get hold of me on email or phone. My details are at the bottom. So effectively, right commodities, right locations, right team and right time. The focus of our activity at the moment is the San Jorge lithium deposit in Lithium Triangle in Argentina. So we just get the next slide there, please, Jane. We'll just pass over the disclaimer there, but why Greenwing? So Rick Anthon, who's our chairman, he's been involved with Orocobre and our Allchem, probably soon Levent, from its formative stages. We came together about 7 years ago with a view to putting a lithium graphite company together. We both were of a shared view, given previous experiences, that the world was heading to a dramatic shift to lower carbon intensity. We started with graphite. We built a graphite mine and operated it for 2 years. In Madagascar, we sold everything from super jumbo flake down to fine flake graphite. We had to close the mine down at the start of COVID. It was simply just not practical to mine there. In the interim, we decided to broaden our jurisdictional and commodity exposure by the San Jorge Lithium project in Argentina. The time elapsed, we've conducted a pretty comprehensive field program. We've attracted a fantastic major shareholder in Neo Inc. Neo are a $25 billion listed company on the New York Stock Exchange who invested $12 million. The company at 55 cents at the start of the year. We have a fantastic board and management. We work really well together. We're all deeply credentialed and experienced in lithium and graphite in particular. As I said, we've deliberately aligned ourselves with what we see are just irreversible trends, which will manifest itself into enduring supply deficits in lithium and graphite. I spoke there a little bit about the 20 months production at Graphmata. I can get into that later on in the program. If I could have the next slide, please, Jane. There's our mugshots. I didn't mention James Brown as well. So I've worked with James for the best part of 15 years in different capacities. James is also involved at Sayona Mining, Morella, and of course with us. He's been in lithium for a long, long time, was MD of Altura Mining for a long time. We have Alan Zeng on there, who's the NEO representative. He's brought several different dimensions to the board with regard to end markets, procuring supply, where supply is at. It's been really interesting working with Alan and having him on the board. Next slide, please. That's the San Jorge lithium project. That's the San Francisco Salar in particular. It's a 2,600 hectare salar. It's encompassed by a broader 36,000 hectare salar package. We own all of it. We went through an exhaustive due diligence process last year, as you can imagine, with a company of Neo's size. We also have the Millie's Reward hard rock project in Madagascar, which I can speak to. There's been some real paradigm shifts there with permitting in Madagascar over the last 6 months. Next slide, please. A little bit on Neo there. Neo are a different company to what your perception might be of Chinese manufacturers. They manufacture high-end, high-quality cars. They've just got a 5-star ANCAP safety rating in Europe, which is reasonably impressive. They've come into us at 55 cents in January this year. The deal was actually agreed on about this time last year. So it's an extraordinary long time over the wall before we could announce it. Such was the due diligence process. Inclusive of that, they have an option to buy up to 40% of the project for $80 million US. That option goes live effectively upon declaring a JORC compliant resource. We've stated in our quarterly and again yesterday with our drill update that we anticipate declaring a resource at San Jorge, an initial resource, by the end of the year. We're drilling a 3-hole program at present. It's part of a 15-hole broader program, which we intend to do there, an appraisal of the San Jorge resource. If I just grab the next slide, please. And this is it. Here's a visual of the project. So you've got the San Francisco Salar there in the middle. We're firmly of the view that it extends off to the west as well. Hence, the first few holes have been drilled on the western edge of the Salar. We own 100% of it. At surface, we barely breached 200 ppm, which is a head grade for other people. In the triangle, we've got up to 285 milligrams. And again, this was at surface. Geophysically, it's a depth of 600 metres, give or take 200 metres, which volumetrically implies there's a potential for a large resource there. As per yesterday's announcement with our first hole at San Jorge, we perforated an initial unit of about 30 metres of mud, silt, clay, interspersed basalt, and we've reached what it looks like an upper aquifer. We're straight into brine mineralisation from 30 metres. We're still in it. We've sent away first samples. We were eagerly anticipating the return of those samples. We're taking porosity tests as we step through the drilling, and ultimately we'll do some downhole geophysics when the hole is completed. Again, we're targeting a maiden resource statement by the end of 2023. As far as DLE goes, we're aware of it. We're not going to deliberately align ourselves to one particular technology. We're stepping through a very careful process of evaluating several different options for us. Next slide, please. It's a lithium triangle. I like to say the lithium triangle is to lithium what the Pilbara is to iron ore. It's the world's dominant jurisdiction at present. It's an established mining jurisdiction, established mining codes, workforce, consultants, operations. We have fantastic infrastructure there. There's a highway that runs parallel to the deposit. It's easily reached from either Chile or nearby towns in Argentina. Next slide, please. Corporate activity. So the most proximal salar to us is Neo Lithium, NEO, not to be confused with NIO, the car manufacturers. They sold their salar in 2021 to Zijin out of China for about $1 billion. That was at 637 parts per million. At the other end of the parts per million spectrum, Alpha Lithium is about 350 ppm, who are currently underbid for about $250 million Canadian. And please bear in mind that we're a $35 million company. We have $9.5 million in the bank. We have no debt. So an enterprise value of $25 million of what, as I said, I think is a very compelling juncture of our progress. Next slide, please. You can just see here's the drill rig there. You can see that the maiden drill hole, which is on the edge of the salar. The geophysics there is a bit obscured by my face on the presentation, but effectively off to the left-hand side of the salar, which is the west, we have a view that the mineralisation extends materially under some cover. Hence the location of the first three holes, all in the western periphery of the salar. Next slide, please. So we think we've got a clear development pathway. We've been through this before, obviously with the graphite. James and I were critically involved in Altura for a long time. Everything from Mount Webber, iron ore through to Pilgangoora. Rick has been there with Allchem, been involved in the critical stages of Orocobra's formation and development. So we are moving into those rapidly value accretive stages, maiden drill program, bulk brine sampling, assessment of potential processing options, moving to a maiden mineral resource, the potential for an option to be exercised for $80 million US, which would imply a valuation of $200 million US for the entire project. We still have the Miller's Reward and the graphite, which if I could just get the next slide, please. Miller's Reward in Madagascar, it's a hard rock project. We, for a variety of reasons, COVID, capital constraints, haven't done the work on this. We probably should have. The surface signature is borderline remarkable. there's 6.9 to 7.1% rock chip samples over the entirety of the tenement package. We took a 31-metre trench sample at 3.7% lithium oxide, which is just unheard of. I'm heading back to Madagascar on Friday week. As I said, there's been some real movement. The mining code's about to pass over there, which we've been waiting for 5 years. I'm going to spend the week in Antananarivo working out the quickest pathway for us to get back on the ground there and start a thorough appraisal of what we think is an outstanding hard rock project, admittedly in its formative stages. Next slide, please. Graphite, we mined in Madagascar for 20 months. We built the mine effectively from scratch. If I just go to the next slide, please, Jane. We've taken the resource from initial 5.4 million tonnes up to 62 million tonnes. This is a commercially proven resource. Technically, the project was a success. We put all concentrates to commercial specifications in bags. We had 43 different customers. We sold and qualified into all major markets, including the US and the Eurozone via Germany. We have 20-year mining permits there. We have current landholder agreements. We're effectively the current landholders there. The processing plant, we did 45% effectively large flake and above, concentrates 50% fine flake. And it's a statement of fact that we didn't have a tonne penalised, let alone rejected over that 20 months. The main problem with the project was that, over 2018, whilst Donald Trump was fantastic at offending a lot of people, he was dreadful for lithium and graphite prices. And when we commissioned the project, we were getting $850 a tonne for fine flake graphite, which goes in phones, cars, computers, all the applications you would imagine. By the end of 2018, that price was down to $300 a tonne. We'd had a very tough first quarter with monsoonal rain in Madagascar, so we actually made the decision to put the mine on care and maintenance with the view that there was another monsoon coming. Funnily enough, it didn't rain, but in March, COVID erupted, and we were safely shut down by then. We sold every tonne we ever produced there. We're 3 kilometres off the national highway, 110 kilometres from the country's only deep water port at Tamatave. So, there will, just like lithium, we think there are enduring supply deficits coming in graphite. It hasn't been as quick to manifest itself as lithium has been. The graphite prices across the complex are still, only barely getting back to 60, 70% of where they were in 2018. So it's a tougher space. It's not as straightforward as lithium, but our view is the graphite's time will ultimately come. We sit there with a very well-developed exposure to graphite. We've grown the resource by circa a factor of 12 times over the last 6 or 7 years. There's a lot more graphite there. We intend to do more drilling. We intend to table a scoping study, an advanced study over the course of later this year or early next year as to what sort of steps we intend to take next with the graphite project. Next slide. I think we're getting close to the end. It's an established and growing resource there. We're starting to get some of our best hits in the south of the tenement package, which is really interesting. With larger resources, there are all sorts of interesting permutations of the assemblage of those resources, which we're starting to see. But again, reconciling back to a $25 million effective enterprise value, we think for what we're presenting to investors, we're a very reasonable proposition. Next slide, please, Jane. Again, catalyst for the next 12 months. In an ideal world, we're very confident that we declare a resource at San Jorge in the latter months of this year. That triggers the option with NEO. It's an option in NEO's favour, but we would like to think that gets acted upon. From there, we go straight into the broader drilling program of 15 holes with a view to prove up a pretty material resource at San Jorge. We're stepping through DLE evaluation at the moment. There's no shortage of interest from DLE emerging companies. The graphite, we'll look to table an advanced study. The real potential mover, in addition to San Jorge over the back end of the year, is if we can get on the ground properly at Miller's Reward. The surface signature there demands that we follow that project up with some comprehensive work. point of the trip next week to Madagascar is to chart a path to that series of meetings, Mines Department, various consultants, working hand in hand with consular assistants from the Australian Embassy, who are outstanding. Been fantastic for us the entire time that we've been in Madagascar. Next slide, please. Yeah, so look, that's the overview. Apologies if I've taken too much time, Jane. I'm not sure if there is any time for questions. I can either take some now or refer people to my contact details.
No, Peter, that's great. I'm actually going to jump into a couple of questions now. So
Sure.
you mentioned that the company aims to declare a resource in Argentina. So what sort of resource are you aiming for?
We haven't put out an exploration target yet, but we did a really comprehensive field program. There were two, I don't know if you call them bids, there were two entities in the data room last year seeking to be involved with the San Jorge project. They both did their own work on the project. All the portents seem to be there, 2 to 289 parts per million at surface, going down to up to 800 metres over a 26 hectare salar. I say in presentations, it's no time for excuses now, it's just the time for execution, which we look forward to doing over the next 3 months, and hope to paint a very different picture of San Jorge other than really compelling surface work.
And I was going to get it out of you there. So when would initial testing start for the potential DLE technology?
We're in discussions with the group actually this morning, so we'll send some samples away there for testing. We've sent some previously, so now that we're taking brine samples daily, and we're in brine mineralisation as we speak, we were from 30 metres. We would like to think that that's materially above the 200 parts per million that we were getting at surface. Of course, we're not certain on that. At the end of the day, it's all buried rocks. We don't know what's in them across projects, commodities. But yeah, no, that process has started. We're in a position now to send samples to basically whoever wants them, and we can.
Perfect. Well, Peter, thank you so much for the great presentation and for joining us on Broker Briefing.
Thanks for everyone's time.
You're welcome. So as Peter mentioned, please feel free to reach out via the contact details on the bottom of the ASX releases if you've got any other questions. So next up, we have a presentation from Galan Lithium with the ticker code GLN, a company advancing towards production of its lithium brine project in Argentina. To tell us more, today we are joined by Managing Director, JP Vergara de la Vega. Hi, JP.
Again, and thanks. Well, good morning from Perth. Thanks to all shareholders and people that would like to understand and know a bit more about Galan. And if we can start with the presentation and get onto it. It's an exciting story to tell, Jane. And we are an advanced lithium developer. We have just recently, last week, got granted permits to start the full construction of our phase 1 development in Argentina. We are located at the salt flat of Hombre Muerto, so our neighbors are Livent, Posco, and Olchem. And importantly, if you have a quick look at that picture, you can see our demo plant that is producing around 5 kilotons of lithium carbonate equivalent in lithium concentrate. We have a full camp now approved for 200 people. All up now, it's going to be 250 people. So we're already engaged to start our commencing of a pond construction within the next week or so. So it's all tools on deck and start developing these. And as the heading says, our view is to become a producer on the first half of the calendar year 2025. So in other words, in a bit more than 18 months, we should be generating cash flow. We should be generating lithium chloride concentrate, and we should be one of the next lithium producers in Argentina. We want to walk before we run. We're doing this on a step-by-step. I'm the company founder and managing director of this company. I've been taking almost 6 years to get to this point, COVID included. And I think that the way that we have done things, it's still in a rapid way compared to our peers and who else is in Argentina. And we're doing lithium chloride concentrate because we're taking the best what has been done in Australia. We want to apply that in Argentina. So with that introduction, Jane, please go to the next slides, please. So where are we? As I mentioned, our neighbors are POSCO, Live, and Allkem, but Argentina, it's also busy today with developing brine projects by the likes of Lithium Americas, Rio Tinto, Eramet. You also got Ganfeng. You've got Xinjiang to the south that has been mentioned on the development, and the neighbors that we've mentioned. So we are in a part of the world that is a lot of interest and a lot of investment been happening in the last few years. And despite the all the noise that Argentina is generating, there is a strong commitment to get this done and get it over the line. Why Galan? Galan offers a low risk and rapid project delivery, and this is something that we have been able to achieve on a step-by-step approach, and we have been able to not only generate a fantastic project, but it's got all the necessary ingredients to develop and to become a producer. Those are a large resource. Today we have a combined resource of 7.3 million tons of lithium carbonate equivalent. So for the Australian audience, that's as big as Liontown Resources. It's bigger today, what's been declared by Allkem at Sal de Vida, which is on the same salt flat. So our resource is significantly large, and importantly, it has the highest grade of any project being declared in Argentina. So we also can execute this project because the team that we have behind Galan is a team that can actually execute this, because we have in our ranks several ex-SQM board members, we got project managers, we got chemical engineers, we got hydrogeologists, we got people that have been then doing this in and out within our Chile, and some of them have got more than 3 decades experience. So they're all betting on Galan because they can see the strength and how much this project can grow, and I'll be explaining the 4 stages of development that we have today. So we have been able to tick several boxes, and including a strong commitment with the community and the government. As a reflection of that, we have been granted permits for phase 1 development. And importantly for our audience is we are going to start our construction very, very soon. So it's all exciting. We have enough funds to kick this off, and this is an important thing because we want to take advantage of this second half of the year, because we want to start evaporating our brine and start concentrating during summer. Next slide, please. So a snapshot about our company. We entirely hold with 346 million shares on issue. Directors and management got 10% of the company. As July 31st, we have $45 million in the bank. So as I mentioned, we have enough funds to get the company to kick off these activities, this construction of ponds, and importantly, become in cash flow production in the first half of 2025. Next one, please, Jane. Now, as I referred before, our neighbor POSCO, Live, and Allkem, that this is a map of where we are and where we're sitting, and we have enough lithium today to demonstrate that we have a pathway to a 60,000 ton long-term development, that it could be reached in 2030, but we believe that we can accelerate this. We're working on this first. We have 4 phases of development, and again, we want to walk before we run, keep it simple, start with a small project, and I will go into the phase 1 in the next few slides. Could you, next one, please? So this is the big picture about the development of Galan and where we're at and where we're going. So phase 1, we got the permits, we done a DFS, we have a reserve for 40 years mine life, and we're going to start executing. What are we producing? We're producing lithium chloride concentrate. And why are we producing lithium chloride concentrate? It's because in Argentina, as you see on the lithium triangle, there will be by 25 or 2026, approximately 11 lithium carbonate projects operating in Argentina. So we don't want to be lithium carbonate number 12. So we can apply what we've seen in Australia, that all producers are producing lithium concentrate and sell that as lithium concentrate to the vendors in China. We're not doing it in China, we're doing that directly in Argentina. So, and I've been asked this question, where are we with offtakes and where are we with funding? What I can say is that we are in discussions with several parties at this stage Importantly, we're giving samples from the first picture that you saw of the demo plant. We engage in our companies here within Argentina, and we are with a view that before the end of the year, we should have something meaningful as an offtake, a binding offtake for the production of Galan. It's not going to be a non-binding, and that's why we've been always avoiding the non-binding deals. A binding one is going to come up. So with that said, the second phase is immediately happening. And why I can say this is because the discussion with the Catamarca government has indicated that they want to help us to work with us to execute phase 2 without stopping at phase 1. So this should be a transition from phase 1 to phase 2. We're currently doing a DFS, and the DFS of phase 2 should be come to market by the end of September. Phase 3 and 4 are later on down the track, and that's bulk of our production. But as mentioned, we walk before we run. We want to get this right. We want to get to phase 2 as soon as we can, and this is what our aim is currently today. Next slide, please. So the company, as it stands, it's from the execution point of view, and from the production point of view, and from the human factor point of view, and all the other areas that you can look into, it's been severely de-risked step by step. The only two ticks that we're missing is offtake and funding, and we are working hard on that. We're going to be putting something into the market as soon as we have news on that. But having the biggest, the highest grade lithium project, and ticking all the boxes in terms of testing that we've done and evaporation, and reaching the 6% concentrate that we mentioned that we'll be producing, which is today is a premium concentrate product, by the way, which is more than double of any lithium by lithium content. It doubles the content of lithium spodumene that is produced in here in Australia. So we are going to get to market. We're starting small, 5,400 tons of lithium carbonate equivalent, attracts a capex of around $100 million. So we're now going to the market with a larger product project that we want to be breaking the bank, trying to execute something, because we learned to what's happened in the past in the lithium triangle with other companies that want to start big and they couldn't raise the money. So just want to get on with it, start finance with our own cash flow, the phase 2 and the other phases coming up. So next one, please. So as I mentioned, 5,400 is our rate of production for phase 1. We already are fully catered to execute this by the camp that we have at Ombra Morto West. We also have a camp at Candelas that can support any other activities that we need and embed people that are required as we are constructing, and then we will be producing. So we can execute solidly in what we have. We have the infrastructure, we have the logistics. We've done this on a way that we have demonstrated that we can grow. Now, we are going to start construction of phase 1, as I mentioned, and we want to start evaporating. The aim is to start evaporating this summer. So we're going to be informing the market as soon as we finish our first pond and start filling that with brine to start the evaporation process. Next one, please. So the metrics about phase 1. Phase 1, don't forget, this is the smallest step that we're taking. And yet the valuation that we done with the NPV and on phase 1, it came out with $460 million US. We have a free cash flow of more than $50 million a year. So this is just the beginning. Phase 2 is 3 times the phase 1. So, and then phase 2 is, so phase 3 is the same as phase 1 and 2 combined. And phase 4, it's equally as big as phase 3. So I just want to give you an indication how big this can grow. And this is where we want to take the company. And this is why we have people with several years of experience that are working with Galan directly to get this company into development. We don't want to sell, we want to develop. We're going to have an offtake, we're going to have funding, we're going to have everything that we need to grow this company and replicate the success that Orocobre has in the past and success that the Livent has in the past and the Old Galaxy had in Argentina. So this is just a token of where we're starting. Next one, please, Jane. So importantly, as I was mentioning, our board has 2 ex-SQM executives. One of them is Daniel Jimenez, that was the senior ex-senior VP of commercial and exploration for SQM, 28 years experience. And it's been a key fundamental part of Galan. Daniel joined us when we were just a $25 million company, and it's been growing all along ever since we started. Importantly, we joined by Claudia, and Claudia is part of the Ad Infinitum team. Ad Infinitum has been a key part of all the development that we're doing. That demo plant is being designed by Ad Infinitum. All the chemical route of evaporation and concentration has been designed by Ad Infinitum. And importantly, we have people with experience to execute on this. I'll go into the next slide, please, Jane. So the name of Juan Carlos Barrera is a very important. I would like to highlight this because Juan Carlos was the ex-senior VP of operations of SQM. He had more than 5,000 people under his wing. He was responsible for developing SQM from 40,000 tons to 120,000 tons. And Juan Carlos worked 28 years at SQM, executing projects, studying projects, developing projects, and he's with us. So the importance of having this team that can execute is fantastic. And not only that, all the medium ranks and everything that it needs to be filled and the expertise that is required in brine comes from Chile. And we are using the people that we know within the lithium industry to develop Galan. So next one, please. So just to round up, why Galan? There's a strong human factor here. We have strong community relationships with the community and the government. We wouldn't get permits if we don't have that. We will not achieve those. So we are very hands-on to develop this and to hire local people. And we've done this fantastically because we got permits for phase 1 within 8 to 9 months. We're going to get phase 2 permits within the next 10 months. So that's a reflection on the hard work that we've done with the Catamarca team, with the Catamarca office that we've done in Argentina, and they've done fantastically to achieve this milestone. So we got experience to execute this, and at many levels, we have most of the people that we have today working for Galan, and they are relevant, they got lithium experience. It's probably one of the strongest lithium teams that's been assembled by a junior company, and it could be easily operating for one of the majors. And lastly, we have the best lithium project in Argentina with high grade, low impurities. Commercially, we're going to answer the question about offtake and the likes, as well as funding, and we're moving forward. Cash flow within 18 months or therefore, and we're going to be turning this corner around, and despite the current environment where we are, we're going to be showing to the market that we can be a lithium producer, and please watch this space. And with that, I end my presentation. Thanks, Jane.
Thank you, JP. That was a great presentation. So we've got lots of questions. I'll jump into them.
Sure.
So the presidential election campaign is becoming interesting with the right-wing candidate being unexpectedly pre-selected. So what would the impact on mining be should he win the election?
Well, one of the key things that he's been saying, this right-wing candidate, is that he's going to dollarize Argentina. It's not the first time that it's been done in Argentina. And if you are in Argentina, go there, the country is half away or 3/4 of the way being dollarized. So I don't think it's going to be a big shock if it becomes a precedent to do and to make this big change. It's a big news in Argentina. But I would like to think that, given that he's an economist by background and by trade as well, it's I believe that these new policies that he wants to implement has some ground and make some sense at some level. It's very radical, yes, because it hasn't been done in Argentina. This is all brand new. But as some of the things that they want to do, it seems, on the other hand, like business as usual in Australia. So it's if you apply Australia to Argentina, you'll have candidates like the one that just came out. Look, I am yet to be seen, but I think that this candidate deserves a go as well.
Thank you, JP. Another one. So can you please provide an update on interest from majors and or offtake partners?
As I mentioned in my presentation a few times, there is interest. We are delivering samples to the participants within Argentina. And that's a critical thing, because without sample, you cannot have conversation about offtakes. We're doing that. We're delivering the samples, and that is opening the doors. What I can say is that no one has come back and said, oh, that's a horrible idea. Don't send me any samples. It's on the contrary. Say, like, look, this is sounds like a good plan. Let's talk, and please send us some samples. So this is advancing. We'll keep in the market informed in due course, and but the conversations are in place.
Thanks, JP. This one's come through a few times. So what options are you currently looking at for funding in terms of debt and financing?
We're looking at non-dilutive solutions. So prepayment, debt as well. So anything that we avoid touching the equity market.
Wonderful. And how confident are you in obtaining export permits for lithium chloride?
Well, there's a second leg on things. And importantly, in the last election, the Catamarca government got re-elected. So the governor got re-elected. So he's got another 4 years to serve, and they'll continue with the same minister. So everything is going to continue as it started. So 4 years is sticking from last Sunday, and this is great for us because we developed the relationship. That means the permits for phase 2 and the likes going forward are very likely to succeed. And importantly, the opportunity to get permits for export, I believe that we got a chance because we are going to be trying to negotiate royalties in a similar way that Australia does for the concentrate sales.
Wonderful. Well, JP, sorry, rather, that's all we've got time for today, but I want to thank you for joining us on Broker Briefing.
Well, thank you very much, Jane.
And thank you all for joining us today for the Broker Briefing Lithium Investor Webinar. Recordings of today's presentations will be available online in the coming days on brokerbriefing.com, and we look forward to hosting you next time.